You see it all over social media, right? People talking about financial freedom, building this massive wealth, all one property at a time. It looks so achievable. But then you start to dig in and bam, you're hit with this wall of jargon that sounds like a totally different language. And suddenly that dream feels a million miles away. Well, what if you had a clear, simple playbook? Let's build it.
I mean, the appeal is obvious. You own a real, physical asset, something you can actually see and touch, that's generating a steady stream of income for you, month after month. It's not just some number on a stock market screen. It's a tangible piece of your financial future. And yeah, that's the dream we're all chasing.
But this is where most people just stop cold. The reality is this ocean of industry jargon. It feels like a secret club, and if you don't know the password, you're not getting in. But here's the thing. Some of those confusing words are actually the secret keys to unlocking some serious wealth. And don't worry, we're going to decode a couple of the most powerful ones a little later on.
That's the billion-dollar question, isn't it? So let's forget all the noise and the complicated formulas for just a minute. Today, we're breaking down the foundational playbook that literally every successful investor follows, starting right at square one.
So, how do we start building this playbook? Well, the very first step, believe it or not, has absolutely nothing to do with houses or with money. It's all about how you think. This is the foundation that everything else gets built on. Okay, this right here is probably one of the most critical distinctions you can make. See, buying your own home, that's an emotional decision. You're thinking about the neighborhood, the schools, where the Christmas tree is going to go. But an investment property, that is a cold, hard business decision. It's driven entirely by the numbers and the potential return on investment, period.
And this quote just hits the nail on the head. It is the golden rule. You cannot fall in love with the kitchen countertops or the fancy backyard if the numbers don't make perfect financial sense. Your spreadsheet has to win that argument every single time. But here's the twist, right? While the decision is all about the numbers, the execution of that decision is all about people. Your success really hinges on the relationships you build with your agent, your contractor, your tenants, your partners. A great deal on paper can completely fall apart if you don't have a solid team to back you up. All right, so you've got the investor mindset locked in. Now, before you even think about scrolling through Zillow, you need a blueprint. This is the prep work that separates the pros from the amateurs who, frankly, lose their shirts. Your blueprint really just has three core parts. First, you've got to define your strategy. Are you going to do long-term rentals or are you looking for quick flips? Second, you have to get educated. Read books, listen to the experts, really understand the basic terms. And third, and this is so crucial, you have to assemble your A-team. You absolutely cannot do this alone. Your core team needs a rock-star real estate agent who actually gets investing, a sharp lawyer to look over all the contracts, a reliable contractor who actually shows up on time, a property manager if you want to be more hands-off, and of course, an accountant who really knows the ins and outs of real estate tax law. So, with your mindset right and your blueprint in place, it is time to go hunting. This is where all the theory becomes reality, and you start the actual process of finding and buying a property. I know you've heard this a million times, but let me give you a real-world example of why it matters so much. There is this story about an investor choosing between two houses. One was on the west side of a highway, the other on the east. Now, the one on the east was more expensive, but a huge new business development was planned there. He picked the east side. And guess what? As all those businesses moved in, rents just soared. The west side? Rents actually went down. See, you can always fix a house, but you can't move its location. Okay, let's just tackle the biggest myth that stops people dead in their tracks. It's this belief that you need to already be wealthy to even get in the game. That you need, like, hundreds of thousands of dollars just sitting in the bank. And that is just not true. So how do you actually invest with less money? Well, the reality is you've got options. You can use what's called other people's money, by partnering with investors or just getting a traditional loan. You can explore creative financing, like seller financing, where the owner basically acts as the bank for you. Or you can just start small, find a manageable property to get your feet wet and build some momentum. Listen, this is one of the most important secrets in the entire industry. Your profit, it's not some hope for the future. It is locked in the day you close the deal. By negotiating a purchase price that's below the market value, you've already won. The pros know this. They use quick rules of thumb to check if a deal is good, like the 1% rule, making sure the monthly rent is at least 1% of the purchase price. That tells them if the deal makes sense from day one.
And now, for a little dose of reality. Look,
Any guy that promises this is all going to be a completely smooth ride is selling you a fantasy. To be a successful investor, you have to be prepared for the challenges that are definitely coming your way.
Just let that one sink in for a second. It's not a question of if you'll face a problem, it's a question of when. You will have a bad tenant. A construction project will get delayed. The market will shift. The key isn't trying to avoid problems, it's having a plan ready for when they inevitably happen.
What I love about this is how it organizes the chaos. We can basically group all these potential risks into three main buckets. You've got market risks, like an economic downturn. You've got property risks, like a furnace dying in the middle of winter. And then you have people risks, like dealing with an unreliable contractor. When you know what they are, you can actually prepare for them.
Okay, you did it. You survived your first deal. So, now what? The goal isn't just to own one property, right? It's to build a whole portfolio. So let's take a look at how you actually grow. As you start to build out your future, you're going to find there are two main paths you can take. Active investing is totally hands-on. You're the landlord, you're managing the flip yourself. Passive investing is where you put your money into deals that are managed by other people through things like REITs or syndications. It allows you to diversify across different types of assets and even different cities without being hands-on.
Hey, remember that wall of confusing words from the beginning? Let's decode one right now. A syndication is really simple. It's just a group of investors who are pulling their money together to buy a much larger asset, like a huge apartment building that they can never afford on their own. A professional, called the general partner, runs the entire deal, and you get to act as a silent, limited partner.
And now for that other secret key we hinted at earlier, depreciation. This right here is one of the biggest legal loopholes for building wealth. The government lets you tell the IRS that your property is technically losing value over time, so you get to take a deduction on your taxes. But here's the kicker. You can do this even while your property is actually increasing in real-world value. It is an incredibly powerful tool.
So, there it is, the mindset, the blueprint, the realities, and the path to scale. The mystery's been stripped away. You are now holding the fundamental playbook. So the only real question left is, what's your first move?
If you got value from this, hit the like and subscribe for weekly investor breakdowns. And keep building your real estate foundation brick by brick. This video was sponsored by Riverside Realty.